There's a concept that I look at, what I call day trading the edges. And what that means is I'm looking at where a daily time frame could be at an exhaustive level. And, we could talk about something like gold here today. And that is looking at the daily time frame of where a market could be at some sort of exhaustive support or resistance. Now, I want to be a buyer in gold. You guys know I'm long. It's nice to wake up seeing that I'm up about 10 points at the end of the day. We had a 1308 level. That's a nice $1,000 per contract. Okay. So this is the oversold support zone we've been talking about for some time. 1308, 1309 was what we were looking at. And so now we're looking for follow through. Well, since we bounced the way we have, I know that we could, one, be seeing some slightly longer term intraday wave breaks. Now, day trading the edge or intraday trading the edge would mean as I'm selling off to that support zone, I'm going to be unsurprised to see that there is a downtrend, and it's the shift in that downtrend to a break that I'm looking to capitalize on, and that's most often something I call a wave reversal or a intraday trend break, where I lose the dots, plot some blue, break either a Darvis plus the top line of the wave. It's awesome when they're overlapping, and then we get long. By the way, that would have happened at approximately 13.5, 13.14 on gold. So that would have triggered it on the 30-minute chart. On the 60-minute chart, if you're looking for something more conservative, now I don't want you just going to a longer-term time frame because you think a longer-term time frame shift is necessarily going to be the best. I actually think the 30 had very good organization. And when I have a Darvis level and the wave breakout level, in this case, the top line of the wave happening at a similar level, that I think is very, very helpful. You can add one more confirmational tool to this, and that would be the commodity channel index on a 20 period. So as we break through, if that CCI is over 100, there's your confirmation. Indicators are always secondary though. So that's day trading the edge. I know that there's a support or resistance level that I'm interested in. And then at that level, rather than buying the exhaustion or selling the exhaustion on the daily, which could actually mean that you might have to take a little bit more heat, the exhaustion range can be quite wide. If you're looking for a momentum-based entry or a reduced risk, another example is the New Zealand dollar versus US, which has a fairly wide range of support on the bottom of the daily channel, if you will, the chop. But instead, what I can do is something very similar to what I just described on gold. Look for a chart that's been heading clearly and cleanly lower, preferably dominant red grab candles, and just a really good downtrend that you would want to short had you been looking at it. The best trend reversals come from the best trends preceding them. And you can see, lost the dots, plotted a blue, and then broke a Darvis, and then right after that, broke the top line of the wave, went green. The top line of the wave is your entry. You could be aggressive with the Darvis break, but I would typically say wait for the wave, wait for the green. And as we go green, if we have a positive CCI, you're in business. And that is day trading the edges.